The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 15th day of September. My pleasure to be here. Let's go through a couple of things now. Great programming we had earlier on. Stay tuned for more great programming all day, ending up with Andy Hecht at 6 o'clock p.m. Dow's up 103 at 18,137. Actually, let me move this away and I can get the numbers much clearer. The Dow is up, as I say, 100 at 18,135. S&P is up 12 at 2138. Comp index is up 50 at 5224. Gold right now is at 1323, down 3. Silver's up 7 cents at 1914. Platinum is down. It's about unchanged at 1037. And you've got high-grade copper up 60 cents at 21.60, still stuck in the 21 area. Crude oil is at 44.39, up 24 cents. Bonds are down 9.30 seconds at 165 and 19.30 seconds. And you've got the dollar up a penny at 95.34. Where are we? What are we doing? Look at this E-mini contract that trades throughout the day and night. The daily is in a sell mode. Nice retracement bounce. This is what I would call an oversold bounce. We haven't, remember I spoke about that sandwich. Let me squeeze this. Opening it up. That sandwich, sharp down move, that big red Friday candle, Monday candle sharply higher. Then there's a very big red candle on the on Tuesday. And what I said was a close below 2100.25. Double check. Yep. Would be very negative and suggest that the market's going to go down further. As it stands right now, the weekly chart, the MACD has crossed negative, the stochastics crossed negative, but it's still at 84%. That's good. Remember, I said I really have to wait on the E-mini for a close on Friday to be able to put a down arrow in. Of course, we've got options expiration. That's going to be somewhat tricky. Now what we're looking at is the 2141 area is the level. If we close above that by tomorrow in the E-mini, it's kind of stalled in a sell. I'd have to call it a sell signal on the daily, but not yet a sell mode. Monthly is still looking great, and the 120-minute chart is in a rectangle formation. It's unbelievable how many times you form these rectangle formations, trading between a low of 2108, I think 2108. And we're at 2133, up 19.75. That's a big move in the futures. And we've had a lot of swings up and down. And let me just show you the 10-minute chart now. It's in leg B. This is incredible because from the moment that the market turned at 9:20 this morning, you made a leg A and then that failed. That looked like, failing. But it held beautifully. And then it went back into the uptrend support trend line. And it broke out, and it went in a single move from that moment on, from 2114.50 to where we are right now with a high of 2133. That, for the E-minis, in a single move, that is big. It's way bigger even than that big spike we saw last week in the single leg A to the upside, starting at 10 o'clock on the 14th. And here we are. This is not a single leg A as far as I can tell. Two reasons. Why? Because we're tackling the high of that single leg A back on the 14th of September to 2134.50, and it looks to me like we will have a left side, right side price tie match to that level. You've got all the way to go until 2:20 this afternoon. I think it'll make it within my show. We should be at least testing that level. All right. So a couple of things. Let's close this out right there. I need to talk about, I had a couple of questions. NXPI, I had a Tiger email me to say I had a fantastic move to the upside, and but then I switched to a put when I got out. What should I do? And I said, if the put is for tomorrow, just get out, because NXPI, which is in the NXP Semiconductor foreign company in Netherlands, I believe. This is only leg C hitting the 200-period exponential moving average in the 120-minute chart, brand new leg A, but it wasn't even that so much. Look, if I give you a weekly chart right here, A, there's your A. What do we look for in the channel wave? We look for 4 higher peaks to a D. D is where you usually put a down arrow, unless it holds very steady and can even break out, but it's where you've got to be somewhat careful. Well, my suggestion is that, yes, I think it's going to go lower at some point, maybe within the next week. But look at the semiconductor index, which we had shorted and took a very tiny loss this morning, like 1.2 or 1.11%, 20 cents a loss on our short position on the inverse semiconductor ETF. But look at this. This is a powerful move, and it made a leg F. I'm going to have to renotate this, because if we take this out by Monday, 67.14, that's going to be a leg C to the upside. At least I think I'm going to have to call it a G/C. And the monthly chart is absolutely fabulous. This is the market vector semiconductor ETF. So that's the reason why I said yesterday that the more work I did, the more I saw that some stocks were highly vulnerable, while at the other on the other side of the coin, the way some of the monthly charts were acting and the weekly charts were still very strong in their technicals, I think we're going to be using a lot more time than price. That's my thinking at this particular point. All right. So semiconductor index, fabulous move up today, up 2%, 66.25 up $1.33. Looked like it was going to make an H failure pattern. No, not at this time. So we're done there. And in fact, there was a stock that I was looking at to short, and then I looked at it yesterday. And I said maybe in the 168 area, and then I looked at it further and I said, no, wait a minute. This monthly chart is still acting pretty well, even though I've got a down arrow. Actually, I really shouldn't do that. The week hasn't finished. I anticipated. It's a sell signal. It's not a sell mode yet, because the MACD is not crossed negatively. It looked like it was. And the stochastic now is just at 79.74. It's not under 80%. So that Avagio, which is it took over Broadcom, it's really Broadcom now, in the semiconductor index is looking very good. And I think that's a big help in the SMHs. All right. So now let me do a couple of things. I've got a couple of questions. I'm going to anticipate the questions, because I always get questions about crude oil. So let's do this. Crude oil right now, CL, is trading at 43.94. There's that H pattern that I always talk about. Remember, I've been showing it for about a week now. The lowercase h, what does it look like? It looks like this. You come down, right? And then you make a little arch formation. It's a lowercase h. And that lowercase h has 3 outcomes. One is, what happens if it takes out that left side low, but closes above it? What if it takes it out and closes below it? And what if it doesn't even hit it and then starts to rally? So in this particular point, we haven't hit the low of 43, round number. We've made a low of 43.26. We're going to watch it closely. So crude oil, to me, looks like it's going to do the retest of that level, and I think it's going to break it from the technicals. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So what we're talking about now, does a bunch of the crude oil at 43.92 up 34 cents has got this lowercase h pattern. So if it closes underneath that left side low of 43, then there's a real good chance it's going to test the 41.83 low of the 11th of August. If it just sneaks underneath and then closes at 43.40, it says it could bounce. We could even bounce to about 45, but then it's going to come back and retest and probably break it then. But if it doesn't even close in the next 2 days, if it doesn't go under 43 at all, but instead it goes to the 44.60s, there's a good chance it could have a pretty good rally. I'm thinking that crude oil at this point is just stuck. It has very limited upside and probably slightly more downside at this point, but it'll accelerate once it's in the 42.50s. All right, hope that clears that up for oil the way I'm seeing it. And that, in fact, would correlate to the market having a rally here into maybe Monday or so, and it may be starting to pull back again because it has to test. This is the big thing here. If you're looking at the Dow, look at that big move in that candle, right? We've seen these big spirals, sudden spirals to the upside that fail. If I'm looking at the 17,990s as key support, any close over the next 3 days where you start to see this give back, a pullback to the 18,050s, which is 100 points lower than we are right now, that's going to suggest that we're going to have a real quick move right into the 17,970s. At this particular point, got a nice bounce. It looks similar to other patterns, but I suggest it'll fail this 20-period moving average. This thick green line, you'll see, goes right through this. The price just merely trades below and above all the time. And at this point, it's just attempting to make a little bit of a stabilizing turn, but the close is going to be very important. All right. So now let's go to, that was 100, is that the 120-minute chart? That was the 120-minute chart. The daily chart shows something a little different. It shows that the MACD and stochastic are still very weak and that there should be a rally failure from here within a day or two. And it should be testing the, right here, this pink channel, this pink dashed trend line, which is the 17,950s. Okay. Now, question about, will I look at we'll go one at a time. So I looked at the SCO, and my thinking of the SCO, which is the inverted, this is the ProShares Ultra Short Bloomberg Crude Oil trading in 96.28. The question was, someone's traded it beautifully. Where would be a good place to get in be? I said, what did I say? 94.10. It's at 96.72, somewhere in the 94.10 area, low 94s. I think would be a nice entry point. I'd have a 2-point stop on this, 5%, 2 point, sorry, less. Yeah, it's about a 2%, 2.5%, 3%. So, okay, and what I'm looking at here is SCO. Covered that. Now, I often get a question about the HO, and the HO is the heating oil. See, this is the one we spoke about yesterday. It's the same thing. At 1.3767 on the first, the heating oil continuous contract bounce came back, and now it's having an inside bar. But if that starts to fail, really, the way to look at it is it goes into the 1.376s. That's going to be a failure pattern that'll impact the weekly negatively. So far, it's just in this little trading range. Okay, got that there. Who else? Oh, XLF. XLF was always a question. It hasn't come up yet, but I'm sure it will. Let me just refresh over there. 1 second. I should move it to the other screen. I don't have to strain my neck. No. Oh, okay. So now what we're looking at is the XLF is having a nice candle today. It's up 6 cents at 23.88, but and it has a left side, right side price time match, which is just broken right here. You'll see. Now, one of the things that I'm looking at is I haven't really got a sell signal on the weekly. It's at a peak. This is a peak E. I can't really name it any other thing but a peak E at this particular point. So I'm expecting a little bit of choppiness, and that choppiness suggests that the levels to watch are 23.50 to 23.30, so 23.89. That's key support on a weekly basis, and the upside resistance is somewhere at 24.10, 24.11. That's the 9-period moving average. All right. Hope that clears that up. JP Morgan is always a question. JP Morgan, Goldman Sachs. JP Morgan just stuck. It's in peak C in the weekly chart. Goldman Sachs is in leg B, probably making a peak B this week. And it's made a peak D in the daily. That's what we were waiting, and it did that, and it's come down. It's in a sell mode, not just a sell signal in the daily. I think there's some limited upside right now in the financials, just on the shorter term, but they're actually holding very well. And I'm going to just say that if you are along the banks and you've got a bank that's holding quite nicely, look at Bank of America, BAC, it's not great, but it is holding at 1565. 1520s is really key. Closes under that, we're looking at a different ball game entirely. In the meantime, it's just holding steady. Next question was GDX, QQQ, the Den asked. GDX. Now, it's going to be very interesting. It's a nice candle. The way I'm looking at the GDX, and I have it on my Traders Corner for my subscribers, I like it. I just don't think it's ready quite yet. It's going to be a lot depending on tomorrow's action. And at this point, it's holding above the 25.17 low of 2 weeks ago. So at 26.39, that's good. And it's got that H pattern, which is holding quite nicely. It hasn't taken it out. My thinking here is that I just need a little more time using stocks like an ASA. I use that just as a benchmark. That matches very nicely the whole pattern of it, unlike some gold stocks like GOLD, which has a very different pattern, had, because it's a much sharper pullback from the high that it made at peak F in the weekly chart at 126.55, coming all the way down to 93, 93, and it's at 97 right now. I just think they need time. So I think they're getting ready. I'm looking at building a bit of a gold portfolio at some point, a little later on, because I think something's going on in this market that gold and the dollar are going to give us really good clues. So let's just leave it at that. We're going to go to Greg in Austin. Greg, how are you?
I'm well, thank you. How are you, Basil?
I'm well, and your UNG has been holding quite nicely, right?
Yeah, got a little touch and go this morning when the report came out, but yeah, I hung in there. So, you know, I know where I want to get out on the downside. So more specifically, my question is, the contract went to the leg D yesterday, but the UNG has not. And so where would, in your perspective, where would you want this to go to the upside?
Okay, so let's do a couple of things. We've got a break coming up. I've got the UNG. You're right. The natural gas went to D. UNG hasn't quite made it yet. We like to have things move in parallel motion. We'll be right back with Greg in Austin, Texas. Dow's up 120, S&P's up 15. I'll be right
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. And the Dow's up 140. Boy, this is quite a squeeze. S&P is up 17 at 2143. And we've got, just as I say, a squeeze going on. Now, this is the NG. We're looking at natural gas. We're on with Greg in Austin. He had this for a little while. We waited for that leg D. Yesterday it made that leg D, but it was in the natural gas contract. But he's trading it. He's positioning himself more on the likes of the contract that you're able to trade rather than the futures. and rather than the contract itself, but it is the ETN, I believe it is, UNG. So UNG, which is the natural gas contract, it is called the officially United States Natural Gas Fund, has a nice move today, hasn't really taken out the high that was made at 8.66. Now, so you're in this, you aren't in the options or anything, you're actually in the UNG. What was your entry price?
Well, actually, I'm in the UGAS, which is the 3 times, and I'm in at 36.18.
Okay. Now, because it trades overnight, so anything can happen overnight. It means you could wake up in the morning and it could gap up or it could gap below your 36. So here's my recommendation. I like the fact that it's holding the 9-period moving average. I like the fact that the MACD is rising, but I'm not happy that the stochastic's only at 67.66. I would have preferred if it was at 80%, I'd say I feel comfortable that it's going to have a big spike above yesterday's high of 41.14 and is going to tackle, in this case, it would be A, B, C. It would be the peak C of the 26th of August at 42.75. So now how can we do this? Because in a way it's doing what you wanted. No, the contract is doing what you wanted. That is the NG contract. But the trading vehicles, sometimes it happens, I see that once in a while between the Dow and the DIA, that there'll be a fractional miss, and it's like that here. But the contract is the core. That's your root. So I'm going to, let's see. So you are, even with UGAS, you're able to put in a stop, right? If you had to.
That's correct, yes. But I typically just follow the UNG, and that's really where I have what I buy and sell off of. I don't really watch the UGAS.
What
much.
have you?
It seems like.
I was going to ask you, what have you done historically when you must have been in this position a couple of times before. What have you done? What has been your protection to say, hey, wait a minute, it's doing what I wanted, but not quite as much as I wanted. That makes me a little nervous because if there is another overnight reversal, if I can't get out of my UGAZ, and it doesn't sound like it's a big deal, but 1 point, 1.25 points is something that the other day it had a gap up, and that gap up was from a high of 37.54 to a low of 38.81. There you are. That's the difference between your entry price and the stop you would have. So I'm just thinking, I would love to say to you, I would just keep it because it looks like it's trending higher. That the direction of least resistance is towards the upside. So there's another way that we can do it. Because you're a little bit concerned, I would lessen my risk. That means you lessen your reward, but just because it hasn't quite fulfilled what we wanted to see, and that is that in this case, I'm going to go to the UNG because it's a little bit cleaner. For the UNG, just missed, instead of going from 866 to 867, the last rally went to 864. So it doesn't sound like much, 4 cents in this contract. That is a big deal. So I'm going to suggest, this is only tough. This is just tough because of the stop. And I'm going to do 2 things. One is I'm going to say to you, look, you've called me because it should have done exactly what we were looking at, and it's just missed by a little bit. And now it's at a point where, yes, it could go higher, and the daily contract pulled back, and now it's at the higher end of its range, which is suggesting that 9-period moving average of 2855 is going to be really important. So let me just use that UNG, see what the 9-period. Okay, the 9-period moving average is 8.39 on UNG, and on UGAZ it is at 37.96. It's the candle that it opened at this morning. I don't think it's going to suddenly gap down below 37.96 based on the action right now. So that would give you at least a way of ameliorating some of the risk. so that if you put in a stop, can that be triggered overnight or not?
No,
Okay.
not for what I use. And also, yesterday in the pre-market, the UNG did make the D-leg and the daily up. It did go over.
Yeah, I did see. Yep. I remember looking at it because I can't remember exactly what the reason was for me to look at it, but I looked at it and I thought, it looks like we could get D. That was the day before. That was yesterday, and I did see that it was acting quite well. I'm going to say to you, look, if you want, take a little bit off your UGAZ right now, just because you're a little uncomfortable with it, and let at least 2/3 ride. And the 2/3 by tomorrow, if it gaps down, it'll be really close. It'll probably be higher than your entry point, so you could always get out. So I'm just going to say my bias right now, based on the weekly chart, based on everything I'm looking at, says there's a sense that it wants to go to higher highs and higher lows. It's had a cup formation, definitely a cup formation consolidation. And I would not be surprised, just based on the chart pattern and the weekly, if there's a sudden spring above 8.87 in the UNG contract. And that would go to, it could recycle to a new buy mode, but at least be able to call it a leg E to the upside. That's kind of what you want to see. If that does happen, I would immediately put a stop on 1/3 of my position, a little bit under whatever it opens at, if it opens gaps up tomorrow. Because that way you're going to protect yourself, and then you've got your core position. The way I'm looking at it, it looks like it wants to run a little higher. And boy, I can just tell you this, that if in the month of September, not much, 2 weeks to go, if it can get to the 9s, the monthly chart has suddenly improved a lot. And that weekly chart will be, and that'll be impressive, because the next real big peak is 887, and then in the UNG contract, and then 927, the high of January, the week of the 15th. I like it as it stands. So I hope that helps you.
It does. Thank you.
Okay, great. Well, good luck. I'll be
day.
watching it closely. Have a great day.
Thanks.
So, folks,
Bye-bye.
let's go straight to Ben in Tallahassee. Ben, how are you?
Great, Basil. How are you?
I'm well, thank you.
Good. So I'm looking at the SPY 15-minute.
Oh, 15 minutes. All right. Give me a
15.
second here.
Yeah.
Okay.
And the question is, anything that stands out that would indicate a single leg A failure? I use that a lot to assess reality, and I think it's still an A, correct?
Yeah, okay. So let me get back. I'll be right back with you in a moment. We're going to be looking at the SPY 15. I'm changing this right now to 15 minutes. There it is. And I'll be back with Greg. Good question.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. Dow's up 145, S&P's up 17. And we're on with Ben and Tallahassee looking at the 15-minute SPY contract. I've got it right here, and it also has my Chapman wave notation, support levels and resistance levels. So this is what we're looking at. Not the notation of the letters, just the parameters for projected support and resistance. And the support at 213 to 212 held beautifully. The low that we saw just at exactly... There it is. That was 1530 on the 14th. So that started the move up already on the SPY. Is that right? SPY? 15 minute? Why would it do that? Yeah, that was yesterday, late afternoon. So it was at 2:30 in the afternoon. The low was 21250. And we've had successively on the 15-minute chart. Don't forget, anything overnight didn't count here because this is just during the day. So the 214.10 parallel high back at 10:30, then 10:45 maintains this as leg A, and 215.40 is the 200-period moving average. The last time that the SPY got to that level at 217.19, it just missed the 200-period moving average, and that was where it pulled back from in the 15-minute chart. This is the first time it's getting close to it, and I've got in my the chart that I was looking at, Ben, in my here it is. This is the E-mini contract. This is the 10-minute chart. It's gone to so far. It looks like it's going to be a peak C, but there should still be a D because of the power of the move. So I'm suspecting that we've got a little bit higher to go. 2138 would be the E-mini futures. So let's go back to the SPY. So your question is there a chance that the SPY right now is making one of those single leg A to the upside moves that could in fact retrace and give back pretty much all of it? Is that a possibility? This is... the answer is, let me just define quickly. When I look at the single leg A up, I'm talking about, let me see if I can find it here. I'll go, this is a 120-minute chart. Yeah, you see this 120-minute chart that I'm looking at of the Dow? It went down to 17,000. Yep, there it is, 994. That was at 11:30 on the 12th. And then it had a single leg to the upside because it had one 10-minute bar with a higher high, another one that went to a higher high, and then a third one that went to a higher high. And at 18,358, it reversed, came back down, it gapped down the next day, and then it plunged and it broke the 17,994 level, went to 17,992 late yesterday afternoon, 1:30 to 4 o'clock. It was making those lows. So that's what I like to look for. When you are in a what I call that single leg A, it could even be an A to a B, but that means that A has just the tiniest little ictus for a turnaround before within one bar it continues in leg B. The whole thing looks like a single leg A up. This is very different. Now I'm going to go back to it because a little bit of a lesson. Usually we use Fridays as the Chapman wave, a deeper look and understanding of the actual methodology. But I'll do it right now. You see the way the MACD is held? Very nicely. It's still expanding, in fact, if you look at the histogram. And the stochastic's been for at least 6 bars, maybe even more, 7 bars. It's been above the 80% level at 94%. This is suggesting to me that it's going to hold quite steady, that 214.33, the 9-period moving average, might be touched, but that is probably going to go towards the 215.39 area, and that's really where I'd be looking at it. So it needs the single leg A up invariably has maybe one big spike, or it could be the leg continues for 2 or 3 bars, but it's vertical and then it gives it back immediately. This is just a very steady, powerful move to the upside in a single leg A, and at this particular point.
Yeah, and of course the implications could be critical at this point, because if this obviously, even at 15-minute, if this goes through its full A through D peaks, that has got quite a bit of room to go based on that trajectory, right?
And the high that absolutely, and then the high that we were looking at back at the 217.19 area from the 12th becomes the next target if it starts to close above that. Yeah, very good point. But my most important point right now is that the single leg A up failure is this defies all those criteria because it's just
I guess what I'm
extended.
hearing is that your bias is toward this completing in the 15-minute all through all the letters through D, rather than a single A failure.
Yes, but the reason why I'm stalling just a little bit is that a 15-minute is a lot weaker than a single leg A up in the daily. And if the daily is saying, I just don't have the strength, then I'd be looking at the 120-minute chart and saying, all right, there's your single leg A. That in fact is, no, wait a minute. If I take the low of 212.31, I could make a case that's AB, this is leg C, but it's all in what I call a failure mode. So it could fail. It's unusual for it to do that. But the larger trend is really what I'm looking at. So the 120-minute SPY, I'll tell you right now that if the 120-minute SPY closes under 214, and then without breaking above 215.15, the high that was made on the 11th, then all I can say is that be careful, because that could be another failure mode. My expectation is, based on exactly what we were talking about, that there should be enough energy to at least go a little higher. But you can see that the move back from the low that was made at 212.50 at 1:15 in the afternoon on the 11th failed at a peak B. So yeah, the 5s and 15s could fail if the momentum of the bigger trend, say in this case the 120, really starts to pull back. But under normal circumstances, with the MACD so strong, the stochastic 93%, it wouldn't surprise me at all if we just squeaked to nominal new highs and even make a D above 21.48, maybe not close there. But very good points. First point you wanted to make was that, is this a single leg A up? My answer is no. It's taken too much time. The technicals are too strong. It should have failed much quicker. So that's number one. So number two is the corollary would be, well, if that's the case, could this now be leg A up and we're getting a leg B right now in the 15-minute chart? Could it still go to a B, a C, and a D? And my answer is yes, it could be. I'd expect that would normally happen. But this is also subject to the weakness that I've been looking at in the daily and the 120-minute chart, so they could drag it down. That's the larger time.
So I guess maybe a better way to look at this moving forward is that if the momentum on the daily or the weekly was on the way up rather than the way down, this would be a good sign that maybe this is a new move up.
Excellent point. You just exactly. My contention is still the Dow's in a sell mode. The SPY, the S&P that's the SPY is in a down mode, a sell mode in the daily chart. The weekly chart are really close. In fact, and for the Dow, I've already put INDU. I missed it. I've already put a down arrow. I'll explain. Can you hold on? I'll explain why.
You know what, Basil? That was tremendous feedback. So
Okay.
I'm going to go with that, and I'll let the next caller go.
Okay, very good. Okay,
Thanks.
thank you, Ben. I will still discuss it, but thank you for calling. Guys, at 134, we'll be back straight after these messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So I wanted to just show this here. This is the gold chart. I'm sorry, this is the E-mini 30-minute chart. I've got two counts. It went from this low, little doji low at about 8 o'clock last night. Couldn't be last. Yeah, last night. And then it went peak A, B, C, D. Now, this could be E, F, G, because the MACD and stochastic did beautifully running high. Sorry, the MACD went higher, and this is a typical thing that you find at G. But then the MACD should have gone very negative after G. Instead, it didn't. So this, in fact, could be an instant restart, and this could be a new D with a doji candle right there. But the stochastics are 93% of the MACD is still expanding. So this says that it really is room to run on the upside for the S&P and the E-mini. Now, what we're looking at, the question about the XLE, very interesting, you see, because it had that pattern that we spoke about. At some point, I said there's a chance that it's going to pull back, and then I just haven't looked at it for a while. But look at this. The daily chart made that peak D. It's pulled back, and it came back down under the left side low, and right there at 67.77. Now it's popped back up, but the MACD and stochastic are still pulling. That says the XLE, the S&P Select Spider Energy Fund, could be pulling back some. So that's going to be very interesting. Then the weekly chart is an alternate count F/C with the MACD still good and stochastic at 73%. And the 120-minute chart says, this is just a bounce. But I had a couple of questions that I want to do right now before we run out of time. I had said to subscribers that the VIX index really seemed a bit extended for the move that we've had, and that the volatility, the TVIX, could pull back quite sharply. So here we are. We're looking at the VIX index. There it is. The VIX index in a sharp move down $1.82 at 16.32. And what I'd said to subscribers this morning is that if the VIX holds in the 0.1620s to the 15s, in the 15s is going to be buying pressure. So this is kind of what we got. That's number one. Number two is I'd mentioned that many of the indices that we're following, like the VIX, has gone to a peak D. The DOG, which is what we're short, has gone to a peak D. This is we are long the DOG, which is 100% short the Dow. We're still in it, still at a profit because we got in on August 12th, which is a very good entry point. But this says to me, this is convincing me that I don't care who the they is, but it seems to me that within the marketplace, the powers that be are going to do their absolute best. They have to do it. They have no choice. That includes the Fed. That includes banks. Includes everyone. If they want to keep the party in power, they have to keep this market at least buoyant. It could pull back another 300 points or so, but they don't want to even get started on the 17,500s. So that says to me that somehow or other, there will be buying pressure to maintain the market in this particular phase. That's the way I'm looking at it. And that's the reason why we are short. I would only short under other conditions. To add to that, we've added a long position. We got stopped out of the semiconductor. There's another reason for saying, hey, there is internal strength, the XLK. I meant to look at that. Haven't updated it, but the weekly chart has gone to this is the Iridian F/B, but it is holding, what a beautiful candle it is over the last week, 4 days, holding beautifully. And it's in leg F/B in the monthly chart. This is good action. And I to tell you the truth, I don't mind being stock. We have one stock that we're short, and it is down huge. Even today it's down huge. Down another 3 points today. From the 270 level went to 230. And that's the way you do it. Individual stocks. I'll be back tomorrow. Have a great day. Check.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.